We are turning now to business news with Nicholas Poynton. Well, Nicholas, two major credit card companies say that they're going to reduce their payment fees today, but small businesses are meeting that announcement with a degree of caution. Can you tell us why?
Yeah, so as you and I hope everyone else is probably aware, that every time you pay for something by your with a card, that the business who you're buying stuff from, they incur a fee with every swipe. And these fees are known as merchant fees. They include bank fees, as well as fees for the hire of the EFTPOS terminal. However, when you swipe with a credit card, that's another fee that's sort of lumped in and bundled together. And look, they may only be a couple of percent, but in the aggregate, if that's how you have to think about this, they can actually be quite the charge, especially for small businesses. I think of like your corner dairy. You know, if they're charging something for $4 and they're incurring quite a small fee on that, it's something that does build up over time. So MasterCard and Visa, they have agreed to reduce the interchange fees that they charge banks whenever a customer buys something. And there's been quite a positive response from this. Retail New Zealand says it could lead to savings of about 0.1 and 0.2%. And look, that may sound very minuscule, but once again, you have to think about this in the aggregate. And they expect that with these savings, that these could be passed on to the businesses. But an advocacy group for SMEs, they say, well, they're a bit cautious about this because it all depends on whether the banks actually pass on their savings to the businesses, because, look, they have a lot of power in this dynamic. And like straight out the gate, Westpac Bank have come out and said that yes, look, they're going to review its pricing structure for a lot of its customers and clients that they deal with, and they say it's going to benefit the businesses where transaction volumes are lower, and this can often result in higher costs. But with an announcement like this, it's really just wait and see. So it'll be really interesting to sort of keep an eye on this going forward to see what, businesses, especially the smaller businesses, are saying about, how that pricing structure is working. Are they actually seeing the benefit of the supposed reduction in these merchant fees?
Yeah, watch this space. And nextly, sticking with SMEs, a report has found that ongoing border closures having a unique impact on them. Why is that?
Yeah, so, well, as we're probably aware, a lot of businesses have been looking to raise money throughout the pandemic. We can think of the big, large companies that are listed on the NZX. About 24 of them have, tapped the shoulders of their shareholders or gone to institutional investors, and they've raised about $5 billion. And look, that's great for them. That's awesome. But for small, privately owned businesses, this isn't really a luxury that they can enjoy. They tend to rely on domestic and overseas businesses and private equity firms to sort of raise capital, because they don't always want to be going to their banks and raising debt. And capital at the moment is really important for businesses. A lot of businesses during the lockdown, they had to tap into the capital reserve to sort of keep things going. The wage subsidy scheme would only do so much for a number of businesses. And capital is also important because there are some strong players in the market right now who may be sort of eyeing the way things are looking at the moment, and they think, hey, this might be a good time for acquisition. And there's also those people who just own businesses who maybe think, look, now's a good time to maybe sell up, but you need someone with capital to buy your business, right? Well, a report from PwC says that the border closures are actually sort of cutting off that flow of overseas capital to our SMEs, because when a deal like this is done between, a small business here in New Zealand and maybe an overseas private equity firm or a business that wants to acquire it from overseas, there's a lot of due diligence that's done, and it's not something that can be done over the phone. Someone from that business will probably travel to New Zealand. They want to meet management. They want to get a good sense of the day-to-day operations. Well, with border closures, that's not able to happen. And what PwC is saying that, look, they've noticed a complete, the transactions they had coming through their corporate finance team coming into lockdown, that is all pretty much stalled. They've been able to do a few deals. So effectively, this one of the main avenues for businesses to access and raise capital has been cut off. And it sort of casts quite a dark shadow over what's going to happen when that wage subsidy scheme ends, because, capital is really important for businesses when it comes to growing their business, for investing, for paying staff. And look, this is another thing. It seems to be a cliche almost. I say every time I come on the show, it's another watch your space type situation.
Very much, yeah. Not looking great though. Can you give us a quick hop around the markets?
Yeah, sure. So the NZX Top 50 is down by 0.5% by 62 points to 11,666. The New Zealand dollar is steady at 66.3 US cents, up by 0.2% to 92.9 Australian, and down to 50.7 British pence. And keeping up with gold, the yellow metal is down ever so slightly to 1,974 US dollars an ounce.
Fabulous. Thank you so much. That was Nicholas Poynton, our business reporter.